Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. Now in this particular video, we're just going to be quickly diving into a trading approach that will completely change how you view the markets. And specifically, we are going to be talking about Forex volume spread analysis, okay? We're going to be talking about Forex volume spread analysis, or VSA for short. Now, if you've ever wondered how to spot accumulation, distribution, or even market manipulation, then this video is for you. So by the end of this session, you will know how to use VSA to identify high probability setups and refine your trade. So let us just quickly get started. We're just going to be starting with the basics, okay? What exactly is volume spread analysis? Now, VSA for short is a method that examines the relationship between three key elements, all right? The three key elements that we're talking about here is volume, right? Spread, and the closing price of a candlestick, all right? So these are the three key elements, okay? Volume, spread, and the closing price of a candlestick. Now together, these give you insights into the forces driving price action. Now in simple terms, VSA helps you understand whether the market is in a phase of accumulation, distribution, or manipulation by large players like institutions, okay? So it's like reading between the lines of price and volume to see what is really going on. Now, let's just quickly break down the three core elements of VSA. Now, for the volume, volume tells us how much activity is happening in the market, all right? High volume typically indicates strong participation, often by institutional players, while low volume suggests less interest. Now, in the aspect of spread, spread refers to the range of a candlestick, the difference between the high and the low. Okay, so a wide spread often signals strong market movement, while a narrow spread suggests indecision. Then in the aspect of closing price, finally, the closing price is where the candlestick ends. So the closing price relative to the range and volume gives you the critical clues about market sentiment. So for example, if you see a wide spread, I'm just going to add the volume indicator to the chart, okay, so that we can use that to track volume, right? So for example, now remember that I said that the spread refers to the range of a candlestick, right? The difference between the high and the low. Remember that the high is of course, the highest point, while the low is, of course, the lowest point, right? So now, for example, if you see a wide spread and you notice a high volume, right? You can see around here, we had quite a spike compared to what we had here. And you notice a high volume, right? And its closing price near the bottom, right? You can see how this particular candle, literally the closing price is, in fact, is at the bottom of the candlestick. So it can indicate strong selling interest or supply. Then the reverse is the case for a buy. If you notice a wide spread, high volume, and the close near the high, that's going to indicate strong buying interest or demand. Okay, so how do you use VSA to spot market phases? In terms of accumulation, institutional players are quietly buying at low prices. You will notice periods of low volume and narrow spreads, right? You'll notice there will be periods of low volume and narrow spreads. often followed by sudden bursts of high volume when smart money enters the market. Then in terms of distribution, distribution occurs when institutions are offloading their positions at high prices. Look for wide spreads on high volume, but with weak upward momentum. All right, so that could be a sign that supply is overwhelming demand. Then finally, let's talk about manipulation. Sometimes you will see sudden spikes in volume and large candlestick movements designed to trigger stop losses, or rather to trigger stops or lure traders into bad positions. Now, VSA helps you spot these traps by looking at the relationship between volume and price. All right. So now let's just look at how you can apply VSA to your Forex trading. So you have to start by adding a volume indicator to your chart like I did here. While Forex doesn't have a centralized volume data, tick volume is a good proxy, okay? Then secondly, you can look for patterns like high volume on wide spreads, followed by small retracements, right? This often signals the start of a new trend. Then combine VSA with other tools like support, resistance levels, to confirm your analysis. All right. Now, before we wrap up, here are some tips to help you succeed with VSA. Okay. So first of all, you have to be patient, right? Do not rush into trades. Wait for clear VSA signals. It is very important, okay? And then also practice on demo account. VSA takes time to master, so practice spotting setups without risking real money. All right? And then combine with other tools. Use VSA alongside trend lines. All right? Make use of your trend lines. They are important, okay? Also, you can use moving averages for confirmation as well. All right? You can also use any other indicator of your choice just to increase your confidence in a trade. Now, remember that VSA is not a standalone strategy, okay? It's a tool to help you read the market more effectively. All right? So it's important that you also take note of that. Now, that is actually how you can use Forex volume spread analysis to decode market movements and make more informed trading decisions. VSA is an incredible tool for spotting trends, identifying institutional activity, and avoiding manipulation traps. Okay, so if you found this video helpful, make sure to hit that like button and subscribe to the channel for more trading tips, strategies, and insights. Let me know in the comments, have you used VSA in your trading? What's your experience been like? All right, let us discuss. Thank you for watching in the meantime, and I hope to see you in the next video. Until then, happy trading.